All right, let's talk about the one thing that Bitcoiners don't like talking about when it comes to how to actually hodl your Bitcoin for the longest time possible. And that is the I word. The I word terrifies Bitcoiners because, in my opinion, they don't know how to get any. And number two, they don't want you to get any because they believe that it's going to involve dumping your bags and stopping their bags, right? But income, the I word, is extremely important. And it's one of the most requested things that I've ever seen. The frenzy on this YouTube channel and Twitter ever since I started talking about the importance of income has been ridiculous. Right, and which is why this is not going to be the first video on income, which is why I need you to subscribe and follow to keep in touch with the developments that happen, because this is a new and emerging part of what's possible with Bitcoin. We are going to talk about tapping into, you and I, tapping into the same markets that make the convertible bonds of MSTR interesting for the holders. We are going to talk about how I have been testing for myself and how I've been allocating my portfolio to provide an income, even though I don't need it, to prepare for a time where I might need it. So that's what I want to talk about in this video. Income is extremely important. I actually made some notes on this one because I was like all over the place getting so pissed off with how people address the idea of income in the Bitcoin space that it's sickening, right? What people seem to not realize is that there are real people buying Bitcoin, people with families, people with jobs, people with life, people with, things going on in their world that need an income. This is why the fixed income markets that Michael Saylor is trying to tap into are a multi-$100 trillion market. There is a reason why these markets are so big, because people need income. And up until now, Bitcoin has not provided a way to generate income. The only thing that you need, that people always say, and they keep repeating the same line, which is, I'm going to execute the buy, borrow, die strategy. Right? It's a stupid thing to say because most people will never be able to access that market. You may be able to, at some point, margin against your IBIT positions. And by the way, I said this a couple years ago, and I wanted to buy a put option on every Bitcoin company because everyone was all over, oh, we got to support Bitcoin companies. Listen, I'm an investor. I'm not looking at my, I'm not looking to cut out my returns based on some kind of romantic philosophical alignment to anything, right? I'm looking at straight returns. And from that perspective, I wanted to buy a put option on every one of these Bitcoin companies that was offering lending solutions, because there's no way that you can offer a lending solution at a 14% interest rate. And by the way, right, everyone says it's all custody is so important. Custody is so important until it comes to lending. And then what do? They rebranded it to collaborative custody. Just so we're clear, collaborative custody means they hold a key. So you're not in control of your Bitcoin when you take a lending solution, and you never will be, because custody is very important to to a lender and an insurer, et cetera, et cetera. Custody is extremely important. So there will never be a scenario where you are not handing over some control of your Bitcoin in order to borrow against it. Now people are okay with it because they realize, oh, this is just how it works. So they've come to terms with it. But the reality is you will always be handing over control of your Bitcoin for lending purposes, for borrowing purposes. And if that's the case, the question is, what is the best solution? If you have to hand over control anyway, are you really romantically interested in these Bitcoin-only companies backed by VCs that are running at a burn rate that will put them out of business in 3 years? Or do you want to use professional market-making methods that the fixed income markets are built on, not just waiting for Bitcoin to develop? These are built on this. This is not new, right? Bitcoin is new to these markets. The markets are not new to Bitcoin. And I think that's very, very important to understand. There is a securitization process going on with Bitcoin, as I've been talking about for the last year and a half, which allows this to happen. It is not like these markets are being now developed for Bitcoin, like the shitcoiners do with their DeFi and all that other shit, right? This is already there, and Bitcoin is now figuring out how to tap into those markets. So, the buy, borrow, die strategy sounds impressive, and it sounds impressive. Sounds like someone knows what they're talking about when they say it. But to the average person, it's not going to be available in an easy fashion for a number of years. The only time the buy, borrow, die strategy has actually worked for the $500,000 to $30 million net worth person is when 30-year fixed rate mortgages came out and people could actually execute those strategies. At a higher net worth than that, you still have to go through the bureaucracy of a mortgage, not a mortgage broker, a broker, a financier, a private wealth management firm that's going to create a specialized facility just for you to borrow, right, against your assets. And so, a lot of these people are in for the shock of their lifetime when they realize that they've just been parroting a line, buy, borrow, die, buy, borrow, die, buy, borrow, die, like a parrot. That's it, right? Because they're never going to be able to execute on it because they don't understand how the financial system actually works. So why is this possible now? Well, there's one development that happened that really started driving interest into this market, and that is the options market being available on the Bitcoin ETFs. The first thing that happened was June 15, 2023. That's when the game changed, which is when BlackRock filed their application for a Bitcoin ETF and started pivoting the entire world of BlackRock towards Bitcoin. Now we have options. What will come next is more and more liquidity being driven into the options market. And one of the ways that happens is with the convertible bonds of MSTR. Because as convertible bond buyers buy that convertible bond, they then have to hedge that. They hedge it, and then they start trading against it. Because the trading against it and selling premium against it generates them 100% return over the same period as their convertible bond. So they're generating their return. But adding that liquidity into the derivatives market of MSTR is what will drive the return. And it's why Michael Saylor has been saying repeatedly the word interesting. Because I started thinking about it when he started saying, I did a video on it, that he keeps saying this word, interesting, right? And again, if all of this is sounding new to you, you need to subscribe to the channel because clearly I've been saying it for a while and people are still flabbergasted by what it means. All of this has been completely programmed. We knew it was coming. I knew it was coming anyway, and I've been trying to say this is coming, these are the steps, etc., etc. So interesting in a financial term means volatility, which is why Michael Saylor started off by saying volatility is vitality. Volatility is vitality because it keeps something interesting. It keeps it alive. And so what would keep this alive? More entrants and more liquidity speculating on top of MSTR keeps it very, very interesting. It's one feature of MSTR. And the more Bitcoin MSTR has, the more of a speculative platform it can become. And therefore, the more liquidity will be drawn to it, which means that hopefully, at least for a short period of time, the implied volatility will go up. So why is this possible now? The options market opened up. Now, I've been doing this on gold. This is why the gold guys hated me originally, because I said there's no point holding physical gold when I can hold GLD and generate a 2% a month income. So that's why they were pissed off with me. The interesting thing with Bitcoin and MSTR is now you can apply the same strategies that I was applying on gold back in the days, you can now do on Bitcoin and MSTR. So I did. I started doing that. I started trying like, okay, what is the difference between, selling covered calls on MSTR and IBIT and selling put options, et cetera, et cetera. I have a methodology that I used to use in order to do that. And so I tried that strategy. I also tried using, the basic strategy for Bitcoin hodlers, OG Bitcoiners. They seem to think that the best method that you can use in order to survive is basically sell a piece of your Bitcoin on a monthly basis. To me, as someone that comes from TradFi, this is all completely insane, because if the goal is to hold Bitcoin as long as possible, you don't want to sell any ever, right? You want to use other methods to generate that income. Now, of course, I'm not saying that this is the only way to generate income. This is one of your income streams that you have. You, of course, have a job, have a business, et cetera, et cetera. I have those things, right? I have a job, I have a business. But I don't have a job. That's a lie. But have a business, right? To generate income. But this is another method to generate income within the portfolio. And we're going to talk about the risks and the strategies that I tried to do that. So let's get into that now, right? So income is extremely important. You need to be able to pay your living expenses. You need to be able to be able to survive the hodl period. Because as you know, and what's happening now with the cycles changing, is that this is going to be an extended period of hodling that you're going to have to go through. And in that environment, do you really want to be sitting there shitting yourself every day that Bitcoin hasn't gone up 4x so you can cash out a little bit? And then give up your Bitcoin. I thought the whole game here was to acquire as much Bitcoin as possible. Well, in order to do that, you need income. Otherwise, you're going to sell down your Bitcoin position. I have this debate all the time with friends of mine that are Bitcoin hodlers. And I say, like, if I have income and I never need to sell my one Bitcoin, right? And you have one Bitcoin and you need to sell down your one Bitcoin to live on a monthly basis. And after 10 years, you have 0.6 Bitcoin and I still have my one Bitcoin. Who won? I won. That's the importance of income, right? So of course, all the traditional income strategies apply, the job, the business, and everything else, side hustles and whatever else, but this is the one other income stream that is now available with Bitcoin that can actually start, in my opinion, to replace real estate income for people. So what did I try? I tried selling covered calls. It works. It works fine. I tried selling puts. And that works fine too, right? All of this works and it works fine. I do want to make a caveat here, and I'll analyze this later in the video. I'm not analyzing any particular jurisdiction's tax here because there are people watching from all over the world. My setup is different. I live in Dubai. There's zero tax here. You might live in the US. You might live in a particular state. You might live in the UK. Wherever you're a tax resident, you've got to do this analysis based on your particular tax residency. So that's the caveat I want to put on it. So I tried selling a couple of calls, works fine. Selling the puts, works fine. And then I decided to look at this, a yield max ETF called MSTY. And MSTY basically does algorithmically and with active trading exactly the same income strategy that I was doing with gold, right? And they execute that in a professional manner with professional day traders that are sitting there day in, day out managing this thing. And so I thought, okay, well, let me compare my performance versus MSTY and see what happens. And basically, my return was less than the dividend that MSTY paid out. Now, there's a couple reasons for that. Number one, I'm not an active trader, right? I'm not sitting here all day trading the markets to try and make a monthly income. That's not what I do, right? I have a life, I have a business to run, I have other things going on. Secondly, their upswing momentum and the way they use it from a professional trading perspective, which you can only do synthetic calls and sell calls on leaps and things that and the other if you're actively sitting here every day watching the market, otherwise you get screwed. They're doing those things to take advantage of momentum upswings that I may not be able to take advantage of because A, I'm not here, and B, there's going to be me holding stock at some point, which I may not be able to trade in and out of simply because I'm not actively trading every single day. I don't want a job. This is not like let's create ourselves a job video, right? So based on that, I found that MSTY was probably outperforming me by 0.6 to 0.9%. And in a rapid upswing movement, they would probably outperform me by a whole percentage point, maybe 1.3%, something like that on a monthly basis. So how MSTY works is this. MSTY takes capital into the fund and then they use synthetic options trades to generate you a yield. And then on the end of the month, they pay you out the yield, right? You can go and look it up. Yield Max's product is out there. There's a bunch. And then after I got into it, I started looking at all of the moronic videos that are out there talking about how MSTY doesn't generate a good enough return compared to MSTR, et cetera, et cetera. And honestly, I felt like banging my head against this marble table here because It's not meant to, morons. Income funds are different to growth products. These are two separate sides of the market. Let's make one thing absolutely clear before we ever go forward with this conversation. If your primary goal is growth, MSTR will always smash MSTY. You're an idiot for thinking that it wouldn't, because the very function of MSTY is to create an upside limitation with a call option to generate you the yield. There's no way that MSTY can match the growth of MSTR because it is not meant for that. It is meant for the subsector of the market that needs income and that is willing to sacrifice growth for that income. So let's make that very clear. I hope that is 1,000% clear, because that was pissing me off. There people are talking about MSTY doesn't match up to MSTR. Yeah, no shit, Sherlock. Of course it doesn't. It's not meant to. It's an income product. There is a fixed income market that doesn't focus on growth. Michael Saylor has launched a 10% dividend product on MSTR to attack the fixed income market. They don't care about growth. They want income. Hope that's clear. Now, MSTY does this and has been paying out roughly a 7% dividend. Sometimes it's higher, sometimes it's lower. But I think that if you are thinking about evaluating this, you should assume it to be a 5% dividend. That's what you should build your models on. Anything extra, you get extra, fine. But 5% is a good number. And they've been consistently paying out that for a year now, right? And so I think this is the best way to do it. Why? Because there's no headaches on management on call options. You don't need to learn about options if you don't know about options. You don't need to sit there and manage actively the account on a daily basis. Now, if you're a professional options trader, then absolutely do that, right? Because you may find yourself being able to generate 0.5 to 1.3% more than MSTY will be able to give you. It's just not worth the trade-off for me. It's not worth the lifestyle trade-off to do that. But for you, it may be. So MSTY's job is to generate you a yield on a monthly basis, right? That's what the job is. The returns have been, if I was to estimate it in my analysis, because the question really now is like, okay, well, if this is generating you a 5% return on a monthly basis, what is the sacrifice that I'm giving up for that 5% return, right? And so you think about it and you go, okay, well, what's MSTR's growth versus MSTY's growth? And I think it's safe. Right now it's been about 40 to 50%. So MSTR goes up $1, MSTY goes up 40 to 50 cents. I think that you should think about MSTY as having about 30% of the return of MSTR's growth for over a longer term period. That would allow for the upswings and the sideways and everything else. About 30%. So if MSTR goes up 100%, assume MSTY is only going to capital appreciate 30%. Right? It's good. We happy with that? It's kind of insane because the QQQ return, the CAGR on the QQQ is like 22% for the last 5 years. So you're utilizing this strategy. And this is the thing, like everyone loses their minds when they experience something for the first time. MSTR is providing outsized returns. And so suddenly people are not happy with a 30% CAGR plus dividends on MSTY when they don't realize that the alternative is QQQ with 22% CAGR with no dividends. Right? So that's the way I look at it. So I decided to move 10% of my portfolio into MSTY, and I drip back a percentage. I think it works out to like 25-30% of my dividends back into MSTY, which boosts the returns, the CAGR a little bit, up to 40 to 50%. And if we have a look at the actual numbers, it'll end up being 60%-ish of the MSTR return, but I'm happy with a 40 to 50% of MSTR's return with a drip of 20 to 30% only of my dividends. So, look, MSTY is an income product that is designed to take a small portion of your portfolio, if you are not focused on growth, and give you an income. it is not supposed to be a product that matches the growth of the underlying, which is MSTR. It's not meant to do that. So I want you guys to really understand that when you're thinking about this. It has been a phenomenal product from what I can see. It has been a product that just takes all of the ease of doing this and ramps it up. Now, the factor that you're going to have to consider is any taxes, right? The US has a very bad tax code for foreign investors like me when you are talking about a foreign withholding tax of 30%, right? No matter what dividends I receive from the US, I have a 30% instant tax that's taken by the broker and paid to the IRS, no matter what. Even with that, MSTY was a better alternative than me doing it myself. Because there's periods of management in when you trade options, when you start selling calls for income and all this other shit, where you may be assigned a stock and now you gotta wait because it's dropped 2 or 3 months in order to be able to sell another call option again at a viable level. MSTY takes care of all of that headache. You don't have to worry about that. They're doing the work. They're doing the work, and every month you're going to get your dividend. Now, what are some of the concerns about MSTY? That some are valid and some are just, complete lack of experience. The concern is, what if the income drops? I keep hearing this from very, very wealthy people that should understand differently. But what if the more entrants come into the market and the yield drops on MSTY? Yeah, sure, that could happen. But I don't see that happening for the next decade, right? I don't see that happening for the next decade because Michael Saylor is increasing the liquidity in the options market for MSTR. That should drive implied volatility up. And by the way, it's also important to realize the price of options is very much determined by their implied volatility on a 30-day basis. You really need to study the implied volatility chart to understand what's going to happen with the dividends and the potential income generation on MSTY. The reason why the convertible bondholders keep chomping at the bits to get as many dollars into MSTR convertible debt as possible is because MSTR has an implied volatility ranking of like 95, right? And then it goes up from there. The baseline in a boring sideways market is like 95. And what that means is they can generate a 95% return on a monthly basis by selling front month premium against that. That's huge. That's why that market is interesting. And as the volatility of Bitcoin continues to go up, especially as the US gets into it and all these other strategic reserves, et cetera, the implied volatility of MSTR is only going to go higher, right? So this is not a concern for me. The saturation of the options market on MSTR, it's got hundreds of trillions of dollars to suck up before that ever happens. So I can only see this going up. Now, the second concern, which I keep hearing, it's a very cool term to say, right? Everyone starts saying it as soon as a couple videos came out about it, was the idea of NAV erosion, right? Like what happens if MSTY continues paying it and erodes the NAV? What people don't realize is that's the fucking goal, right? The goal is to use the capital in the fund to generate a return, add that return on a monthly basis to the NAV, and then pay out from the NAV. It looks bad when it's going down and in a sideways market because it looks like they're paying you from the capital that's been invested, and that can happen, of course. It's a part of any income fund, right? You can pay back, but they're not guaranteeing a fixed dividend, right? They're utilizing the markets to generate that yield and give it to you. So when you see the price of MSTY drop on the ex-dividend date, the reason why that's dropping is because they're taking the cash out the fund and giving it to you as a dividend. After that, when it's paid out on the payment date, there's going to be people that decide to reinvest in the fund. There's going to be people that take it out. There's going to be a certain amount of capital that comes back into the fund to push the share price back up. And then there's going to be more and more interest that grows as the share price of MSTR continues to run. So let's get this straight. You should definitely not invest in MSTY if you think the volatility of Bitcoin is going to go down and you don't see a bright future for MSTR. If that's you, don't even think about this. Don't analyze it. It's going to be shit. If you think that Bitcoin has a bright future, that more capital is coming into Bitcoin and more capital is coming into MSTR, and you need an income, MSTY is the product that I have decided to use for my portfolio. That might change, which is why I say it's important to subscribe to the channel, because there might be new developments in this market. There's new things coming out all the time, right? BlackRock may release a fund that's better. Bitwise might release a fund that's better. MSTR themselves might release a fund that's better, right? We don't know. So it's important to keep in touch and keep subscribed to the channel and keep watching the videos, because this is not the first conversation and only conversation that we're gonna have about income. I've realized that this is a very, very important topic to discuss. And for now, MSTY is my product of choice in order to do this. I'm getting dividends on a monthly basis. And again, people always talk about, but what if the share price goes down? Well, what if you were fucking invested in MSTR, dummy? Guess what's gonna happen to the share price? It's gonna go down. So, my estimation of MSTY is this. I want it, if I take all the dividends out on a monthly basis, I want it to give me a CAGR of 30% of whatever MSTR grows at. I'm completely happy with that, considering the CAGR on QQQ is 22% over the last 5 years. If I can beat the QQQ while generating a 5% per month yield, I'm golden. Right? On a small 10% of my portfolio, while the rest of it, MSTR and Bitcoin, is accelerating to the upside at 60, 70, 80% a year, I'm completely happy with that. So that's the way that I would think about this. You need income. Income is extremely important. If you have sufficient income from a job, from a business, etc., do not hold MSTY, because you'll be better off focusing on the growth side in MSTR. But just be aware that when you do need it, you can just click 2 buttons and flip from MSTR to MSTY, and in the front month you'll start receiving an income, just like you were receiving rental yields on a real estate portfolio. The difference is that if MSTY, because of MSTR, goes down, then now you're going to get 7% of this lower price, not 7% of what you originally put in. But I did that, and I looked at my return on actual investment, and the lowest that it's been, even with these fucking swings that we've had over the last 8 weeks, 3 months, was 3.9% in a month based on my original capital invested. Now that's not really the goal here. The vision for me is, if MSTR is gonna go up to $3,000 a share, MSTY will be $100 a share minimum. And when MSTY is $100 a share, remember, you're gonna get 7%. And that 7% is gonna be $7 per share that you buy today. And that will end up being 30% if you bought at today's levels per month. So that's what I decided to move 10% of my portfolio. And I'll probably keep, as we continue forward on an annual basis, 10% in income, right? Again, it's still growing I want it to grow at 30% of MSTR's CAGR, which is about 30%, right? Still growing at 30%, still giving me the dividends on top of that 30%. And that's what I want. I have no issues considering I was a real estate, gold, and equities investor, I have no problem with 10% of my portfolio growing at faster than the QQQ. And on top of that, giving me a dividend. So a lot of things to think about, a lot of things to digest here. Watch this video, do your analysis, give me any questions, and I'm happy to answer them in future videos. And subscribe to the channel, because ultimately, there's always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.